Hello everyone, welcome to the ichimokucharts.com daily analysis for the S&P 500 for Thursday, August the 18th, 2011. Well, a change of trend today, and we have a candle that's made a lower high and a lower low. Very large red body candle. In stark contrast to the previous 3 or 4 candles, we have a very large red body candle. Yesterday's trading, we highlighted that we had a spinning top type candle, a candle of much indecision, and that was a candle where there was upside price rejection and downside price rejection, and not the sort of candle that you like to see at the top of an uptrend, and certainly did set this market up for a potential lower high and lower low and change of trend to the downside. Now this has been quite a dramatic trading day with a very large red body candle with the sellers making very significant net bearish progress, and the sellers closing down towards the low to take very strong control of this market. The sellers did, however, lose some commitment as the market tested at the support level at 1133. So that's a very important number for this market tomorrow when we open up. If we do see bearish trading down below that level, then there's a likelihood that we will test down to 1106 and down to the 1100 round number where we have this swing low. Now, just looking at our Ichimoku charts, the cloud here at the top, we can see that the market is trading well down below the cloud, so the market has an overall negative bias, and the market is now trading below the Kijun Sen and the Tenkan Sen. The Kijun Sen is the pink line here, and we could see that the market was tracing back towards there. We had a Kijun Sen that had turned flat, and quite often price action is attracted back towards there. Today the bears have taken over, and we've had the market trading away from the Kijun Sen, so we might expect to see the Kijun Sen pointing down over the next few days. The market has also begun trading down below the Tenkan Sen, the green line, and that represents the trend in the fast-term time frame. So we have a bearish market in all 3 time frames, in the long-term time frame, the medium, and the fast-term time frame. We also look at the Chikou span, that's below the corresponding price action, so that's confirming the negativity that we're seeing in the market overall. Obviously, as I've said, for the next day's trading, this 1133 area is very important, and then certainly down to the round number 1100. Below there, only a few areas of support until we trade down to much lower levels. Below 1100 we have a figure at 1080 and then at 1041, so we could see this market trading substantially lower, testing down to 1041 if we do see continued bearishness in this market to the upside. We do have potential resistance back up at 1200, but quite a few levels between here and there where the market is trading at the moment. There was 1150, 1163, 73, 83. Funny, they all end in 3, but they're areas that the market could find resistance if we do test to higher levels, although those levels were broken significantly over the previous day's trading. Certainly the round number 1200, where we saw the indecisiveness coming into the market and a failure for the market to continue the move when we broke just up above there a few days ago, suggests that that is a very strong level. So for the next day's trading, certainly 1133 is, and just below there, is very important. Okay, let's take a look at light sweet crude oil next, and the setup here for this market was very similar to the equities market, very similar to the S&P 500, where we had this very significant sell-off below the cloud, a bearish market, and a retracement back towards the flat Kijun Sen. An indecisive type candle for the previous day's trading, and potential for a change of trend, and then a very large sell-off with a very large red body candle today. So a bearish market in the big picture terms by trading below the cloud, bearish in the medium term time frame by trading below the Kijun Sen, but neutral in the fast term time frame. We're trading at the Tenkan Sen, and the Tenkan Sen has actually held as support for this market. So that's a very important level going forward for tomorrow's trading, 82.45, and then certainly the low of the current candle at 81.27 is important. We have strong support down below this region. 80, the round number, is important. 79.25 is another level, and 78, and then the major swing low down at 75.71. But some very strong support until the market reaches down to that level. Below there, the next support level is at 72.63. So a bearish market in 2 time frames, potential to be bearish in that fast-term time frame as well, and but very solid support down below. Next we'll take a look at gold, and very bullish market. We can see we have a very large red body candle, a continuation of the trend to the upside, with candles that are still making higher highs and higher lows. Was potential for a change of trend on the previous day. Something of a hanging man type pattern was set up, but no confirmation because the market failed to take out the previous low, and no lower high and lower low. And the trend has continued on its way with a very large bullish green body candle with the bulls in control. Some lack of commitment at the highs, but it's only a minor thing. Bullish in all timeframes, trading well above the cloud, trading above the Kijun Sen and Tenkan Sen, the pink line and the green line here. And both of those lines are pointing up very sharply, reflecting strong upside momentum. The Chikou span is a long way above the corresponding price action, so confirming this bullishness that we're seeing in the market. If this market does retrace, and we could expect that it should relax at some stage, we should see the initial amount of support at the Tenkan Sen, and quite often that happens when we have a market that's been trending up very strongly in that fast time frame. The Tenkan Sen is the first area where we see support. So 1754 is the first area that we could see support if this market does come off. No indication that that will happen, however, because the trend is still up and we have a very bullish candle. But if we do see some negativity coming in, then look to that area for potential for the bears to lose commitment and the bulls to come back into the market. And finally, we'll take a look at silver. We have a first time frame uptrend in this market, a candle that's made a higher high and a higher low, a green body candle. So we have the buyers making net bullish progress on the day between the open and the close, and a similar amount to the previous day's trading. We did have some downside price rejection as the market tested out up above the cloud and tested to the 41 level, which was a previous region where we saw resistance in this market and some selling coming in. But we also did test down to the round number 40, and we can see that we have a shadow on the bottom of the candle here, which represents upside price rejection. So some the sellers losing commitment around those levels, but the buyers losing commitment up around 41. Now, the market is still trading within the cloud, so we have a neutral market in big picture terms, but a bullish market in terms of trading above the Kijun Sen and Tenkan Sen, so bullish in the medium term and fast term timeframes. This market is set up for a potential test up above the cloud. That would be a bullish signal with Ichimoku charts. And the best signal that we're likely to get is one on a bullish candle. So if we see a weak candle on the breakout, then that really does diminish the significance of the breakout. It still would be a buy signal, but only a fairly weak one in terms of short-term dynamics, and may not be supported by the bulls. But if we do see a bullish candle on breakout, then there is a good chance that the market will test above 41 and test to these levels up here above 42. We don't want to preempt the market, though. We do need to wait and see how the market reacts. But just looking at previous tests around this zone, we can see the selling that's coming around this level. So it wouldn't surprise if we saw this market actually come off and test to lower levels. If we do see a change of trend to the downside, we should expect to see support at 40, then down at 39.47, at either the Kijun Sen and Tenkan Sen, which are at 39.66.5, 38.99, and then certainly down to 38.18. But we have a very large amount of support all the way through the cloud, so the market could hold up in any of those regions. Some major swing lows down below those levels as well, so very strong support down below, strong resistance overhead.